Hello and welcome to another episode of the Startup Operator Roundup. I'm Roshan Karyappa.
And I'm Gunjan Saha, and together we break down the biggest headlines from India's growing startup ecosystem. If this is the first time you're tuning into this channel, then please consider subscribing, for we share regular updates from India's startup community and also have interesting conversations with founders, investors, and other operators. And if you're a returning visitor, then don't forget to like this video, share it with your friends, and leave us a review on your favorite podcast platform. Now, this past 7 days has been fully action packed. We all know about the stories that went down in the headquarters of OpenAI, the fight between Sam Altman and the board. So, in this roundup, we'll be trying to make sense of everything that went down. That aside, Binance CEO CZ, he pleaded guilty to some charges by the DOJ and he's stepping down as the CEO of the company. And closer home, India is set to become the first non European market, which will soon be announced Tesla's most affordable EV car. Then we'll be sharing some updates from India's hardware PLI scheme. Dell, HP, and 25 other companies get the government's approval to manufacture in India. And lastly, we'll be decoding the new updates by RBI towards consumer credit and discuss the impact it will have on fintechs. So stay tuned as we break down these updates for you. Okay, so it's safe to say that the last 7 days or previous week has been nothing less than action filled. We had the World Cup, we had all of these stories breaking out in Silicon Valley's Thanksgiving weekend. What do you make of this? What went down for you?
Yeah, it felt like the world was kind of conspiring to distract Indians from the heartbreaking loss in the World Cup finals. Okay. But first of all, before that, let us acknowledge that the Indian team played amazingly well, winning 10 matches and unfortunately losing the match that mattered in the tournament, right? But yeah, fantastic stuff, boys. And hopefully, you guys make us proud in the T20 that's coming up. But this whole OpenAI drama, right? It was at the end of it. It was like so pointless. The only great thing is there were a lot of these memes that came out, and of course, from a Microsoft point of view, they've emerged out of all of this, so much stronger. Right, but let's just understand the chronology of all of this, right? So there was a board meeting led by Adam D'Angelo, who's on the board, right? And they decided somehow that they lost confidence in Sam Altman, who's the CEO of OpenAI, and he was asked to resign. Right, and now this kicked up a whole fuss with a bunch of people jumping to Sam Altman's support. Right, these included investors like Vinod Khosla and of course Satya Nadella of Microsoft, saying that OpenAI without Sam Altman is an inconceivable thing. Right, and there are theories about why the board came to this decision. Again, all of these are theories. I wish that we could have been a fly on the wall in some of these meetings and really understood what went down. But one theory that's gaining prominence is an Axel versus D cell sort of a theory, right? Saying that Ilya Sastikover, who is the chief scientist at OpenAI, he is freaked out by the fact that they're close to AGI, or general intelligence, and he wanted to actually put the brakes on some of their innovation, while Sam and the rest of them, right, were gung ho about just like pushing the throttle and just heading forward, right? Now it seems a little too simplistic to me, but it could have some credence, right? Because if you look at some of the tweets that Ilya put out earlier, one especially, right, where he said that intelligence without empathy could be dangerous or something to that effect, right? And some of the stuff that Sam alluded to before and after the demo day that was held recently as well. Maybe there was some tension, at least on that front, for sure. Right. So whatever the reason, Sam was asked to resign. Then a bunch of people jumped in to support. The other great thing was, Satya Nadella emerged as the sort of a kingmaker in this entire thing, right? He jumped in, and within about a couple of days, right, within about 48 hours. And bear in mind, this is an Indian dude, right, with the World Cup finals happening, and he jumps in to structure it in such a way that Sam and OpenAI team, right, following him, could join Microsoft and head their Microsoft AI research, right? So he does that. Now, how he convinced someone like Sam to join a Microsoft, right, such a large organization, with all of its, hierarchies and structural stuff, right? I mean, is amazing. It just speaks to the person's persuasion, I would say, right? Um, so so he does that, and meanwhile, a bunch of employees of OpenAI start tweeting in favor of Sam, right? I mean, they say that, the
OpenAI is
differentiating thing.
nothing without its people.
Yeah, exactly, right. So all of them start saying this. A bunch of them sign a letter saying that, if Sam is not reinstated, we will all follow him and we will quit. And literally 90% of them say this, right, including some of those whose visas were supported by OpenAI, right? So, we may not know much about Sam, but clearly they believe in him a lot, right? I mean, they really, really trust him. So all of this happens, and then, the board does a U-turn, right? So the board decides that, what, maybe we are wrong. So yeah, Sam, please come back. Come back to OpenAI, and he is reinstated as the CEO. Um, there is a rejig of the board, and Brett Taylor of Salesforce. I don't know who the others are. I mean, perhaps you could look it up. But a bunch of these folks are brought in, and there is peace between Ilya and Sam as well, and the two factions are sab changa hai mode, right, basically. So yeah, I mean, a lot of these things happened, and we're back to the same place. But look, I mean, it exposes one thing, right? That the potential for innovation on the AI front is something that everyone cares about, right? And now, whether we will get to AGI, artificial general intelligence, in a year, 5 years, 10 years, I'm not sure, right? But it is something that can have massive impact, and pretty much everyone recognizes this, right? So, what are the learnings from this? Well, the learnings from this. In my opinion, I think, one, the board has to be aligned with the vision of the leader at the helm, right? The CEO. And if you are a founder, you need to take your board a lot more seriously, I feel, right? Because boards can make or break a startup. Second, be that kind of visionary CEO who can rally people around you, right? I mean, the support that Sam got, I mean, you know, any CEO, any leader, any founder anywhere would be so envious of that, right? So that is amazing. And the third, I think, some of these differences of opinion, some of this misalignment, right, it tends to get worse if you don't address them right away. you know you may not resolve it this moment, you may not resolve it today, you may not resolve it this week, right? But you have to put a mandate to kind of resolve this within a certain time period, or it tends to sort of spiral out in different ways, and you're left dealing with the consequences of something like this. So yeah, all in all, a very, very eventful week. The Israel Hamas, or the Ukraine Russia war and whatnot, right? All of it got buried, right? But yeah, I mean, all's well that ends well, I suppose.
Yeah. But also, something that really stood out for me, apart from the kind of the way Sam Altman handled the situation, is also the way Satya handled the entire situation, right? I mean, I think when this news broke, Microsoft shares had fallen by around 12%, right? And according to some reports online, Satya was informed like a minute before the blog went live on the OpenAI website. So I kind of got curious, and I just did a quick Google search saying, okay, how did the stocks perform when Steve Ballmer was the CEO, and how is Microsoft stocks performing since Satya took over? It's a drastic difference, right? And I think this single incident kind of just showed, okay, who is the bap of this AI
Yeah,
race,
for
and that
sure. I mean,
definitely matters.
it shows the potential of a great CEO. The funny thing is, I know someone who sold all their Microsoft stock just before Satya took over. Right? I mean, but or so they claim. So we don't know for sure. But yeah, I mean, Satya has been a phenomenal leader, and I think this sort of reinforces that. So hopefully, he will go down in the Hall of Fame in the Valley. I mean, in terms of visionary tech leaders.
Well, talking about tech leaders, CZ has pleaded guilty to the DOJ charges, and he's stepping down as the CEO. Binance, which you all know as the largest trading platform in the world for cryptocurrencies, was charged for conducting an unlicensed money transmitter business, conspiracy, and breaching sanctions regulated by the Department of Justice. So towards this, Binance's founder Changpeng Zhao, he has pleaded guilty and will be resigning from his role. And in addition to this, he'll also be paying $50 million to the settlement. Binance as a company also pleaded guilty and they will accept the appointment of a monitor and pay a criminal fine of nearly $1.8 billion and $2.5 billion in order of the forfeiture to settle three criminal charges. Now, the total fine that is being paid is to the tune of $4.3 billion.
Wow.
And this is the largest penalties that the Justice Department has ever obtained from a criminal matter. Now, with this development, I think this is a huge blow to the cryptocurrency sector again. The settlement comes, I think less than a month since, Sam Bankman Fried was convicted of fraud and conspiracy after the collapse of FTX. And though CZ and Bankman Fried they're very different in characters, but both of them promised a very bright future for digital currencies, and they even predicted one day crypto could replace sovereign currencies, right? But well, the reality could not be further away from that. So what do you think about this? Do you think the government should set regulatory frameworks for global platforms as well on how they operate internally? Because ever since the taxation laws are implemented in India, many of the crypto users are using platforms like Binance for their trading. So what does it mean for us?
Well, all of this is just a case for more regulation in crypto. At least the US regulators will be rejoicing at this stuff, right? You look at the kind of people involved, the Department of Justice is involved, the Treasury is involved, right? And so this is like the motherload of, wrongdoing that they have found, right? And $4 billion, right? That includes a $1.8 billion fine, is just massive, 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 massive stuff. I feel bad for someone like, let's say, Brian Armstrong of Coinbase, right, and a few others who are trying to be sane in this entire space, right, because they must be feeling, hey, what the hell were you thinking, right? I mean, allowing these kind of things. I think the crux of all of this is that there was very lax KYC on the Binance exchange, right, and all kind of bad actors used the platform to sort of make these transactions, right? 100,000 transactions apparently, and look at the names. I mean, it's not a good look, right? I mean, it's Hamas, Palestine Islamic Jihad, ISIS, Al Qaeda, you name it, right? And 100,000 transactions. You see, it's simple as this, right? When you build a road, anyone can use that road. Someone could use that road to apply an ambulance and save a life, or someone else might use that road to go and kill someone or something, right? Well, it's not as simple as that in the financial realm, right? Because you have an understanding of who's using a platform, and let's say there are some shady transactions happening, there should be checks and balances to alert the authorities involved. You cannot run the equivalent of a wild west. It can't be completely laissez-faire, right? So yeah, I mean, it's just because of actions like this, I mean, even the good guys are hurt. Now, in terms of the broader crypto community, I think the people who are using Binance, because it was a little lax on regulation and because there were loopholes, well, obviously they will leave. Then the general crypto audience who are not deep in crypto but are investing in crypto from an asset diversification perspective, I mean, they might be freaked out, so they might leave. Right. So who's really left? I mean, the really deep people, right? I mean, the people who believe in crypto maybe for the ideological reasons, I think those are the only ones who will still be on these exchanges, right? And it's a very sad look, I would say, overall on the industry, right? Bitcoin has done phenomenally well in terms of the price over the last 2 or 3 months. There, I think it's probably at around $36,000 at this point, right? And Ethereum has been doing okay as well. So I'm not sure, man. I mean, this is what it is at this point. All of this just makes the case for more regulation, and the US will move ahead and do this, and the rest of the countries will just follow, I suppose. By the way, I mean, last week Javier Miller, who is elected as the Argentinian president, is also a crypto fan, right? I mean, he's a complete libertarian nut in some sense, right? And he is also very pro crypto. So it's funny that both these events have happened in the sort of the same time period, I would say.
Yeah. No, I think that stands out. I think India will very soon emerge as a key player, right? Because even in the G20 presidency, our Prime Minister is very vocal about the need for global regulations around crypto, blockchain, and even AI, right? And given the stories we are hearing from the previous week with OpenAI, with Binance and stuff, right? I think India will soon become a very influential voice because we have been setting stricter regulations around these technologies, and I'm pretty sure that once these regulations get set, this will become like the de facto thing to follow for a lot of emerging economies.
Yeah, I mean, you can also think of something like the TikTok ban, okay, which was ridiculed in 2020. But now, I mean, a lot of people in the US are starting to realize that, hey, TikTok could be very dangerous, right? I mean, given the sort of misinformation, given the sort of ideological push that it gets, right? I mean, so yeah, India is doing commonsensical things on this front, I suppose, right? I mean, like not letting people screw around with the sovereign currency and so on. So, yeah, we'll have to wait and watch what happens in the broader crypto sphere.
Yeah, you can't just grow at all costs anymore. There are costs to be paid.
Yeah, for sure. The consequences for every action.
Yeah. Okay, there's good news for all the Tesla fans here in India. India is set to become the first non-European market for Tesla's proposed most affordable car. The company is considering setting up a factory in India if the government approves a concessional duty of only 15% on imported vehicles for the first 2 years of operation. They are willing to invest up to $500 million dollars initially, which can go up to $2 billion dollars if the import duties are reduced further. The current import duty is standing at around 100%. The government is currently evaluating this proposal, and an announcement could come as soon as January 2024. The initial Tesla vehicles manufactured in India, now this is the kicker. The initial Tesla vehicles manufactured in India may cost just rupees 17 lakhs. Now, while the Indian EV business is growing, I think there's still, a huge need to attract a larger client base in the country. And with that, established players like Maruti Suzuki, Hyundai, Mahindra, Kia, and Toyota, they're also preparing to introduce new models, right? So there'll be a lot of increased activities in the market. And yeah, while Tesla is Tesla, what do you think this industry will look like?
Yeah, so this whole Tesla and Indian government interaction over the last 3 or 4 years is a case study on how to bargain and how to negotiate. 2021, 2022, Elon Musk was, cribbing about, hey, import duty being really high, right? Which is the case, I mean, for anything less than $40,000, it's about 60%, and anything beyond that, there's 100% import duty, right? So the cars would have become really prohibitively expensive in India, right? It would have costed 60, 70 lakhs. So what do we have now? Right, because the government did not buckle then and say that you can just like manufacture your cars in China and come and sell them here in India in the open market at a reduced cost. Because the government prohibited something like that, despite the amount of pressure from all the Tesla fans and the auto experts and whatnot, right, we have a few different things happening. Number one, Tesla is going to set up a manufacturing plant in India. The Gigafactory is going to be able to generate something like 500,000 cars, apparently, which is a very big number, right? So you think about all the employment, think about all the secondary, tertiary impact that will have in terms of the economy. That is one thing. Second thing, Tesla has also considered a cheaper car, right? A car in the 20 lakh range. Now, in terms of car sales in India, October of 2023 was the highest car sales in a month ever in India. Think about that for a second, right? So really, in terms of consumption, India is killing it, right? And India is a viable market, even though EVs itself are maybe like 2-3% of the market at this point of time. The the amount of demand is growing. There is an aspirational class, and this segment of 20 lakh cars, right? I mean, the sort of a mini SUV segment is really heating up. I mean, if you look at Maruti, Tata, Hyundai, and so on and so forth, they've all released different variants in that, and they're all trying to compete. I am personally excited that we might have a Tesla car in that range. It'll really, what do you say? I mean, it'll really take it to the next level, I feel. Although, what I was hearing is the classic Model S has very low ground clearance, and it might not be the best car to drive on Indian roads with all the potholes and speed breakers and whatnot. But Tesla, I think, will launch a similar sort of an SUV car in this range, right? So that's the second thing that we have, right, which is a more affordable sort of a car. So I feel that this is a massive win for India, in terms of being able to negotiate such things. And this is what we need to do with some of the other multinationals on other products and other industries as well, right? Which is, ask them to build capability here and do what China did, right? I mean, attract manufacturing, build an ecosystem, and then be able to create IP ourselves. So fantastic, fantastic stuff. This is also in line with our climate goals as well, right? So amazing stuff. I'm using a hybrid at this point of time, and it gives almost 2.5 times the mileage of a conventional car. So yeah, all of this is a win-win-win, I would say.
But also, like, if I were to ask you, do you think this entire boom in the EV industry, do you think this is some sort of a bubble? Because while, yes, of course, the government is giving a huge impetus for the development of EV infrastructure, I think in the next 5 to 7 years, by the time EV becomes mainstream, we'll also be seeing other forms of engines as well. For example, hydrogen-based engines, or blended petrol and stuff like that. So, how promising is the EV sector in itself today?
Well, I mean, all of these can exist, right? I mean, all of these levers can fire. I mean, I don't think we have to be, you know, religious about it and say that, it's EV or nothing, right? I mean, India has made investments in biofuel and hydrogen fuel and plenty of other, right, solar and so on and so forth. I think we should have all of these options available, and look at anything that can help align with not just the green goals, but also have the right productivity, efficiency, in terms of cost and performance as well, right? If you look at EV cars right now, on the performance basis, a Tesla car is perhaps the best in the world at this point, right? In comparison with any other car out there, right? So what is required? I mean, the infrastructure is required, maybe charging stations, services, and so on and so forth, right? So once that is ready, I think it could, there won't be any difference between, let's say, an EV car and something else, I would say.
So that aside, I mean, a few months back, we also spoke about the new PLI scheme 2.0, which the government introduced for IT hardware, right? And this had a budget of 17,000 crores. This was in May of 2023.
Hmm.
Now, just 6 months down the line, India has been now providing subsidies to major companies like Foxconn, Lenovo, Dell, HP, and Asus Tech. And this has the objective of boosting domestic manufacturing and establishing India as a key player in the global supply chain for electronics. The government expects that these companies will directly create 50,000 jobs and indirectly generate about 150,000 jobs more. The total investment is estimated to be around $360 million, and the projected value generated from this IT hardware production is pegged around $42 billion, right? Now, I do not remember in my lifetime where a government has moved this quickly,
Hmm.
right? But hats off to the Prime Minister. I think this initiative really aligns well with the Make in India campaign, right? But again, this kind of begs the question that will all of this momentum sustain, given that now we are entering an election year? What do you think? All this progress made, how will we sustain that?
See, some of this is a secular growth trend, but some of this acutely depends on the government doing the right policy thing, right? One thing that you can say, whether you want to be political or not, is that the last 3 or 4 years, especially post COVID, right? I mean, we've made the right policy decisions. We just spoke about what happened with the case of Tesla, right? It's so easy to just buckle under the pressure and say, hey, yeah, you know what, we will reduce import duty, or you know what, you can just sell your products en masse here. But the government has taken the harder option, and for that, we have to sort of appreciate them. Now, even with this whole laptop situation, I mean, a bunch of people were skeptical. A bunch of people were criticizing that, hey, our laptops are going to cost more. We don't have the capabilities to start building our own laptops, and we should be able to buy these from the open market at the cheapest rates possible. But the government has negotiated well on this front, and forced some of these folks to start manufacturing here more and more, right? See, if you look at the auto industry, for instance, you know the 70s or 80s, I mean, the entire car parts, everything included, used to be just imported from abroad, right? So let's say Maruti Suzuki or Kawasaki Bajaj or whatever, right? I mean, the Indian entity would just import these parts and then completely assemble it here. That's it. Then from there, we started making some of these ancillary parts and accessories and so on and so forth. And India is such a large market on that front, to a point where, we are excited about a Tata Tech IPO, which was super, super subscribed this week, where, a lot of original R&D and innovation is happening. So I think, just as you have to crawl before you walk and you have to walk before you run, there are some things that you have to do. You have to assemble before you start making some of these ancillaries and whatnot, and you have to make these ancillaries before you sort of make the core R&D and the tech, right? And it's great that we're able to do this for something that is so ubiquitous, and such a core part of everything that we do personally and professionally, like computer systems and whatnot.
Yeah. So another department of the government that has been really active in ensuring the right policies are in place is RBI. Right now, fintech companies believe that the impact of RBI's most recent order on unsecured loans will be seeing effects of that in the next 6 to 12 months. This will prompt these fintech companies to diversify and strengthen the secured portfolios. The RBI, what they did is that they tightened norms for personal loans, credit cards, and other unsecured lending products by increasing the capital requirements for banks and NBFCs. So, what this essentially means is that they need to set aside more funds for unsecured borrowings. Now, fintechs that rely on banks or other NBFCs companies for funding are now focusing on quickly developing their secured portfolio options to make it at least 40% of their overall portfolio. Now, in the recent past, we did see the cause and effect of unsecured lending, especially with the likes of BNPL products. And now RBI is saying no, you cannot just have 100% of the value set aside through through other collateral, but that needs to now increase to 125%. So what kind of ripple down effects do you think fintech companies will face, and how will that translate to for borrowers like you and me?
So let's take a step back and try to analyze this, from a very first principles basis, right? I mean, what does this whole risk weight, really imply? It implies that if you are offering a loan, then let's say 100% of that cash, 92% can come from depositor money, and 8% can come from, equity money. Basically, this is for banks, right? Now, what the RBI has done is basically raise that 8% from equity money to 10, right, which is like a 125 sort of a weightage. They've increased it. Okay. Now, how does it impact NBFCs borrow something like almost 50% of their funds from banks, right? The rest of it, they raise it from the money markets. Similarly, fintechs are tied up with these NBFCs or banks to lend to people, right? Now, all of this does not apply to loans that have collateral. So it could be a house or vehicle, and so on and so forth, right? So these are all, think of it as your personal loans or your credit cards and so on. So these are unsecured loans. Now, should we be worried about this? Not really. I mean, this is what it was earlier as well. So pre-COVID, it was 125%. The RBI had eased it to make money more available, because obviously, there was COVID and there was a exceptional situation. Now we have just gone back to those pre-COVID days. That's it, right? But what this will mean is that the margins for all of these NBFCs and fintechs will be hit for sure, right? It is not going to affect, let's say, an HDFC Bank, which has, a hell of a lot of credit on the, the houses and the vehicle loans and whatnot, but it will definitely hit your fintech or your NBFC, which has a large unsecured loan book, right? So it will hit their margins. They will have to hold a lot more money in order for them to give out these loans, right? So that is what it will mean. Now, from a consumer perspective, your loans may go up from 16 to 16 and a half or 17%, who knows, right? It might increase by a few basis points, but does that mean that people will stop borrowing? Well, I am not entirely sure. I mean, if a 1% difference is going to make a impact on your buying something or not, then perhaps, I mean, you should not be buying that stuff in the first place, right?
That was some sound financial advice.
Yeah, I mean, well, you don't get just entertainment and startup news here. You get some. Well, I mean, let's qualify that it's not financial advice. Hey, if you want to buy things at 16 or 17 or 20%, it's your call, right? Go for it. But I'm just saying, right? I mean, it's not going to impact someone a lot if it goes up by a percentage point, right? I mean, if you're buying an iPhone or whatever else. Um, but it's going to make things progressively harder for fintechs. I mean, it's the signal more than the impact. The signal is that RBI wants to say that, hey guys, be a little careful about this stuff. We had this whole NPA situation, in the 2015, 16, all of that time, right? And that was caused massively by corporate lending. And since then, the whole consumer lending, retail lending has picked up, especially after the cleanup that's happened in the banking sector. Right. I mean, we don't want a similar situation happening on the retail side. Although, I mean, it will be a lot more complicated, right? And the chances of that happening is less than institutional lending. But in any case, I mean, it's just a signal. Just read this as a signal. Think of RBI as this headmaster who has just come in to inspect your class and get your shit in order. So yeah, that's about it. So make sure all the books are all right, and study for the tests, and you should be good.
Yeah, I mean, kind of a very active principle that would. All right, let's move on to some of the notable fundraisers from the week. Global Dental Service, which operates the oral care chain Clove Dental, they raised $50 million from Qatar Investment Authority, the sovereign wealth fund of Qatar. Then we have Scapia, which is a fintech firm that raised $23 million in a Series A round that was led by Elevation Capital and Three State Ventures. Kiwi, which is another fintech startup, raised $13 million from Omidia Network India, Nexus Venture Partners, and Stellaris Venture Partners. And we have Bars Bikes, which raised $8 million from Big Capital, Rakuten Capital, Kalari Capital, Nine Unicorns, and others. But the highlight of the week has to be Pocket FM, that is closing in on an $80 million
Yeah.
round. And towards that, you put out a tweet saying to succeed in India, you don't just need product innovation, but also pricing innovation. Case in point, Pocket FM. So help us understand that a bit.
Yeah, I'm tired of this trope that people often throw that, India is a DAO market and not an ARPU market, right? Folks like Kunal Shah have said that ad nauseum. Now, I feel that there may be some credence to that, not disagreeing, right? I mean, if you look at, how much ad revenues your Google or Facebook or whatever else makes here versus the world, obviously, I mean, it is lesser in comparison. Yes, we are a per capita income of $2,500 kind of a country, and we're not at the level US or China is. So for sure, right? But then I don't agree with the fact that you can't make money in India, right, as a consumer app. Now, if you look at the monetization journeys of Stage or Cuckoo or Pocket, Pratilipi, and the others, now they've showed that Indians can pay and Indians will pay if you price it according to the value that you're offering them, right? Now, what is Pocket FM's pricing innovation? It's very simple, right? Now, if I were to buy a Netflix subscription or a Prime subscription, I get everything in that library en masse, right? Now, what percentage of that do I really like? Do I consume? Maybe, 5% of that, 10% of that, right? But I'm still paying for all of the others as well. Now, this doesn't translate well in an Indian value conscious mind, right? So What Pocket FM has done is figure that, hey, you can pay as you use, right, and you can pay for some things in the library, some categories in the library, right, and some of these assets in the library, and they've figured other innovation on how to get people to pay for stuff after they use, right. So now that is amazing. So we might have Rohan of Pocket FM, who's the founder, on the podcast, hopefully in December or January, and we'll try to understand a lot more on these nuances from him. But this is a phenomenal achievement, I would say, right. To be able to get 160 million is a phenomenal achievement. So kudos to them. And remember that some of this revenue is recurring as well, right? So yeah, fantastic stuff.
It'll be interesting to have Rohan on the podcast and like hear it from him directly on how he managed, to build this, to scale it, and then again come up with such innovations. Because this kind of reminds me what iTunes slash Spotify did for the music industry, right? Instead of being forced to buy an entire CD out of which you might just like one or two songs, you can now just download the specific songs that you like, and this kind of sounds similar to that.
Yeah.
All right. Moving on to a talk of the town section. Now, usually we just discuss one tweet or one post, but this week we want to talk about few founders that have taken to Twitter, taken to LinkedIn, and shared their stories as to why they're deciding to shut shop. Right. So this will be interesting. First up, we have ShareChat that is shutting down MX Takata. The company is now going to transition its users to its own short video app called Moj, post the acquisition in February 2022. Then O slash, which offers AI powered semantic search capabilities for enterprises, they are shutting down operations. We have Anar, which, after close to 4.5 years of existence of building a networking platform for SMBs, they are shutting down and returning capital to investors. And another interesting story along the similar lines is that of DealShare, which was a company that was, valued close to $1.7 billion, having raised $300 million in funding. Their co-founders, Vineet Rao and Shankar Bora, they have stepped down from their respective roles as CEO and Chief Operating Officer, and they're joining this growing list of startups that are, trying to scale the group buying model in India, like Uran and Misho. Well, Uran and Misho have also tried it, but they have also pivoted since. So we're seeing a lot of these stories of, quote unquote troubled waters not being able to scale and shutting down shop. I mean, what is this signaling to? What do you make of all of this?
See, this is, it's a very unfortunate situation, but given where the markets are, right, we are still in a downturn. This is not entirely surprising. Founders are amazing, right? I mean, they've taken a risk. They've decided to do something out of the ordinary, and literally anything that you consume is built by someone of this mindset, right? So the founder journey is something that we absolutely have to respect. So kudos to all of them for trying in whatever way possible, right. Now, a couple of things. So one is that if you did not have product market fit earlier, really iterating in this kind of a market where people are tight on the purse strings, they're not spending, and instead the cutting down on IT budgets and whatnot is going to be heck of a challenge, right. Even if you have a beautiful product, like for instance O slash, their product was really nice, right. I mean, very elegant, but unfortunately they haven't managed to get enough paying customers for them to sustain, and Ankit has taken the very painful decision to sort of fold, right. And hopefully he is again someone who we'll have on the podcast as and when he's ready to talk about his experience, right. But there's certainly a lot that we can learn from him. Then you take the case of the others, right, whether it is DealShare or ShareChat and so on. Now these folks kind of rode the wave in 2021, I would say, right, raised a boat ton of money for some of these things that were unproven, right, this whole group buying instance, for example, or the whole short video content and so on, right. It was unproven. It was throw of the dice, and you may argue about, hey, was all of this capital required, was it used in the right way, so on and so forth. And maybe that could have gone to some other startups or other products or other solutions and whatnot. Now that is us speaking about it on hindsight. But in any case, I mean, there isn't a place for them at this point of time given the circumstances. Right, so I just hope that the next iteration of startups and founders will be a lot more smarter and wiser. Right, that is really what we can hope for, in the downturn, right? I mean, that the froth will sort of like get scooped up, and the real businesses kind of get built in this time. So we have spoken to so many founders on the podcast, literally 200 plus founders. And I would say a healthy percentage of them, maybe 30 or 40% of them, are second, third time founders. Right, so if you're a founder who's kind of struggling and who has decided to like sort of shut shop at this point, remember that entrepreneurship is a journey. I've been a failed founder myself, so I kind of understand how difficult it is. But don't give up on that path. I mean, come back with another idea at another time. And yeah, wish you all the best.
Well, you asked about, figuring out whether money is being used in the right way or not. I think that ultimately depends on whether were you able to generate more cash out of it, right? I mean, case in point, JustPay. We recently had Vimal on the podcast, he's the founder of JustPay, and he went on to talk about how they made a side bet for Namayate and how they grew up. So that was a fantastic conversation to listen to. But apart from Vimal, who other guests do we have lined up on the podcast?
Well, we're going to take a break from founders and have an operator on the podcast. So I spoke to Preeti Padmanabhan, who is a senior director at Freshworks, very senior marketing leader. She's been with Freshworks pre-IPO, Nutanix pre-IPO, and so on. So has very nuanced views on what it takes to lead large organizations and teams. I had a fun conversation with her. We spoke about marketing. We spoke about talent. Trying to stay relevant in your career and so on. I think it's a phenomenal podcast from a how do I build my career in marketing and sales and growth perspective, right? So do check that out. By the way, the last couple of episodes have gotten a lot of love. Both the conversation with Kaushik Mudda of Ethereal Machines and Vimal of JustPay, which we just released on YouTube yesterday. Right, so yeah, let us know, folks. I mean, what you kind of appreciate, who should we have on the podcast, and so on. We'll try to get more of those people. A bunch of really interesting guests lined up on the hard tech side of things. Right, so yeah. By the way, I mean, we publish all the podcasts first on Amazon. They're our partner right now, so do check it out on Amazon if you haven't. The podcast will be available on other platforms like Apple and Spotify a week later, so you might see a little bit of a lag, but hey, it's an opportunity for you to explore a new medium, I suppose.
And folks, if you want to be the first one to know when these episodes are coming out, then do remember to follow us on our social media platform. You'll see the links in the description. And if you want to kickstart your day with updates from our side straight into your WhatsApp inbox, then check the WhatsApp link, which also is in the description. So that's it for the 135th Roundup episode. We hope you enjoyed this conversation. If you did, let us know by clicking on the like button and sharing it with your other friends and network. We'll be back again next week from the studio with more exciting updates from India's growing startup ecosystem. So stay tuned and thanks for staying with us right till the end. See you at the next one.
Thank you, guys, and don't forget to share, please. I mean, like Gunjan said, we are entirely organic. We don't run ads as of now, right? So every bit of help from you goes a long way. So yeah, let more people discover our content. So thank you.